here today speaking with Drew Adams. He is the president of StoneCreek Capital. Drew, welcome.
Thank you very much. Thanks for having me.
Absolutely. If you can please give us a brief overview of you and your firm.
Okay. StoneCreek Capital is a private equity firm that's been around since the early 90s. There's two partners, myself and Bruce Lippian. We've been working together for well over 20 years now, and we're focused on the lower end of the middle market, typically companies with $2 million in EBITDA and above, kind of up to the 15 to 20 million EBITDA range. We're industry agnostic, so we will look at a variety of industries as long as we feel it's one that is ultimately kind of a leverageable industry, so a high tech or something that might reinvent itself with regularity. Probably wouldn't have an interest in real estate, oil and gas, that sort of thing. But otherwise, we're very much open to companies in the lower end of the middle market, pretty much anywhere in the U.S., but being based in Southern California, we kind of prefer the West Coast if we can get them.
Sure. And I'd like to talk to you today about a recent deal that you've sponsored. So if you can give us a brief overview.
Okay. Yeah, we just closed a transaction middle of last year. It was a very interesting company for us. It was located on the West Coast up in the Pacific Northwest, and it was the right size from an EBITDA standpoint. It had a very solid, impressive management team that we wanted to back. One of our core focuses is always backing a management team, and the vast majority of times as an existing team, though there are transactions we've worked on where we've actually had to build a team for whatever reason. Maybe it was an owner who was retiring or a business unit spin out, you had to create a team. But here we found an in-place management team that is one of the best we've had the opportunity to work with for many years, and we're quite excited to be able to pursue that too.
And now, what makes a strong management team for you and your firm?
In this situation, it was severalfold. This is a company that had been through some change historically. It originally started off as an entrepreneurial business. The entrepreneur had backed away from the company about the time that they hired the gentleman that is currently the president and CEO of the business. And he's just done wonderful things with it. We were able to truly see his imprint, and his track record was very, very evident in the cultural change of the business, the operational improvements, the quality of the team that he hired and helped to assemble, the ability to, strengthen the customer relationships. Unlike a lot of entrepreneurial companies, he also is working with a very high quality CFO, which is something that is very unusual in our lower end of the middle market, to have somebody who truly does fit that role. More often than not, that's the first position you have to go look to fill, because that person might be really more of a senior accountant level or controller versus CFO. So we just had a great team, and they have a really proven, very impressive track record.
And can you talk to us about the structure of the deal?
Yeah, the transaction was structured. This is a deal that we were able to go out and find three parties to come in and work with us, where they provided all of the junior capital that was required for the transaction. So that did really several things. The first thing it did is it put the capital structure at, from a practical standpoint, a very low risk perspective, because if all the junior capital, the sub-debt and the equity, is coming from one group of investors, then even though that structure does have a fair amount of debt in it, if there is a blip or an issue, some sort of cycle, customer loss, anything like that, the party who owns the equity won't move against themselves, as it were, right? So this can be a very, very safe structure in that sense. Plus the groups that we found, the three of them had a prior working relationship on other transactions, working together. They have much deeper collective pockets so that we can pursue add-on acquisitions, which is definitely part of the core strategy of this investment, is to find some additional companies to put together that are really good operational strategic fits. And it's nice to have a group that, even on the surface, somebody had talked to us along the way and said, gee, is that going to be kind of like herding cats? And the reality is that it's not in the least bit with this group of investors. They work very well together, all very, very smart people, highly responsive, very supportive of StoneCreek's effort to work closely and collaboratively with the management team to create value going forward.
Great. And Drew, I have one last question for you. Are there any interesting takeaways or lessons learned from this deal?
I think from our perspective as an independent equity sponsor, which, if we hadn't described that before, is a private equity firm that doesn't manage an existing fund. So we don't have a group of limited partners that have a blind pool that we invest in. So every transaction that we find, we need to go out and find the right party and partner for it. And for us, this was, I guess, a reinforcement of the benefits of working with this type of investor, which falls into the category of an SBIC investor. And they have tremendous flexibility in the type of capital they can put to work because it's both mezzanine debt as well as equity. And it's just a very collaborative, supportive group. So that's really our takeaway, is that the SBICs of the world, especially for the smaller sub-10 million EBITDA companies, are probably some of the best groups to work with if you're an independent sponsor.
That's great insight. Thank you, Drew.
Thank you. Appreciate it.
I appreciate you taking the time to speak with us today.
Thanks for having us.
Absolutely.